Welcome to the X Factor Real Estate Podcast, where we are simplifying the world of real estate one podcast at a time. I'm your host, Teri Hudson. Let's get into it. Welcome to the podcast. Thanks for joining us. I'm Teri Hudson, principal broker of X Factor Real Estate. So excited you're here. We have Shawn Finnegan with us today, and I'm really excited about this episode. So, Shawn, you're from Hive, but why don't you kind of introduce yourself for just a second, and then we'll jump into it.
So, Hive, we do bookkeeping, tax filing, tax planning, and so I'm part of that group. I'm an investor with the Shark Tank guy, Kevin O'Leary. We've been friends with him for like 9 years. He's an incredible partner, and he's an incredible promoter for the brand.
That's awesome.
Yeah.
That's awesome. And did you know him before the whole Tax Hive came to fruition?
Yeah.
Okay.
Yeah, so I met him 9 years ago, and he was actually running for Prime Minister of Canada.
Wow.
And my job at the time was to pitch him on getting on stages for our company. So we wanted to promote his brand, get him out in the spotlight. And so it was my job to pitch him. So I had literally a 30-minute meeting set up, and he's in Canada, in Toronto. This is the middle of the winter. So I flew up there.
The only time you're sweating in the middle of the winter.
Yes,
when
I was very much sweating
this
because this is someone who gets pitched on the hourly basis.
Totally.
So I had really 30 minutes to pitch him. And I was staying like a block over from his office, and it was 20 degrees below zero. I was freezing cold. Literally, my brain was so cold. I was like, I have 30 minutes. I think it's going to take me 30 minutes
to warm up.
My brain to defrost and warm up. So I remember going in, and I was like, what do I do? How do I pitch this person who gets pitched all the time? And I went into a 24-hour bank to try to warm my brain up because I got to be on point. And the thought came to me in that moment: first seek to understand, and then to be understood. Like the Stephen R. Covey, right?
Okay.
Because I was like, he probably gets people saying, hey, check this out, check this out.
Yeah.
And I didn't want to be one of those people who's like, check out my stuff. I wanted to understand what his brand was and what he was doing in the future.
Yeah, very cool.
So I went into the meeting. It was intimidating. And I said, hey, Kevin, I just want to start off up front. I'm a big fan. I watch the show. I follow your brand. What's the future look like for you and your brand? And that answer was about 30 minutes. And he started unpacking his ecosystem, which is he was running for prime minister. He had a book coming out. He wanted to promote this. And as he was doing that, I could see his ecosystem. And then at the end, the seek to understand, I said, well, his answer was 30 minutes. We ended up spending about an hour together. And at the end, he said,
Good sign that you got your appointment extended.
Yes. So at the end, I said, hey, this is how we can help you on getting on our stages, because we can sell your book. We can help raise funds for you. You're running for prime minister. This is how we can fit into your ecosystem.
That's very cool.
Not the other way around. And we did a deal with Kevin, and we booked him maybe to speak 200-300 times.
That's amazing. Yeah. Are you a Ted Lasso fan?
Oh, yeah.
So you remember that scene when he's playing darts?
Mm-hmm.
And the guy's like, oh, I've got this in the bag. Had a total ego, right?
Yeah.
And then Ted gets up. And he's like, there was this quote, right? And it said, be curious, not judgmental.
Yes. Love that
quote.
So
he said, if you were curious, you would think you would have asked questions like, hey, Ted, do you ever play darts? Right? Like that's essentially what you did.
Yeah.
You went in there and started asking Kevin about him instead of, hey, pay attention to me. And I'm more interesting than you, Kevin, right?
Yeah,
it's probably
right.
how he gets approached a lot. So that's very cool.
I think salespeople make a massive mistake where they want to just throw up on people.
100%.
Right?
Yeah.
So the whole example of sell this pen to me, instead of just going through the features and benefits of the pen.
Why do you need this pen?
Yeah.
Yeah, totally.
Tell me what you have in mind. What do you use pens for?
Yeah.
Yeah. What's the right kind of fit for you in this pen? Like, what kind of comfort do you like in pens? All those kind of things are what you should do. Ask the client, and just, you have 2 ears, 1 mouth, right? Use them in about that percentage of,
Love that.
2 to 1, right?
I love that.
It's true.
That's awesome. Okay, so back to your introduction, though, right? You do this, and then I have met you through a few different events, right? Business masterminds and events I've heard you speak at, and I thought that this would be an amazing opportunity to have you on the podcast, because not only are you engaging as a person, but you're very knowledgeable within that tax realm. I'm sure in other realms also. You have business in general, but But the cool thing about this is, so this podcast is geared towards the public in having them benefit from the information and be able to apply it,
Yeah,
right?
right.
A lot of times in real estate, but we touch base on other things also. Other episodes that I've done, I have a lot of experience in real estate, obviously, right? I'm a principal broker. I've done a lot of deals, all of those things. So those other topics I've been pretty knowledgeable about, and I've brought people who were more knowledgeable than me in that specific thing. The cool thing about this is, like, on a scale of 1 to 100, I'm probably a 3 when it comes to what I know about tax strategy and how to implement that and benefit from that.
Sure.
That is not my strong suit.
Right, sure.
And so I wanted to get you on here and just ask a ton of questions and
Let's do
have
it.
you just kind of break it down for me and for the listeners of what we can do in and outside of real estate that we should be doing, because the two things in life, right? Death and taxes. So if we could avoid one of those as much as possible.
Work on the other one.
Yeah,
right.
that'd be amazing.
Yeah.
So
Right.
I guess, like, let's just jump into
Let's do it.
So I heard you speak once, and you had these crazy numbers about the amount of tax advantages. What would you call them? Tax deductions?
Yep.
That people don't take advantage
That's right.
of. So, like, how many are available out there compared to what people actually do?
Yeah. So let me give you the worst bit of tax advice you'll ever get.
Okay.
You ready?
I'm ready.
So the worst thing that somebody, and we've all heard this, when you start making money, especially in real estate, money starts flowing in. You always hear that person that says, hey, that's a good thing. Just pay your tax. You know, it's a good thing that you have to pay tax.
Yeah.
And then you as an entrepreneur or an investor in real estate, you're like, well, I guess this is just what I have to do.
Yeah.
I have to write a big old check to the government every tax season, right? It's the worst advice you can hear. The best advice is, hey, congratulations, you're investing in real estate. Did you know that as a real estate investor, there is a truckload of the codes that you can take advantage of these deductions. So you're sitting there with a treasure chest that you can open up as now that you're a real estate investor.
Yeah.
So lean into that and
new
take those
opportunities.
deductions,
Yeah.
right? It's just the opposite. So, you know, when you're a W-2 person, you can take up to 10 deductions. But when you become an investor business owner, you can take up to 1,400. The whole code is written for us. as business owners.
1,400.
Yeah, so there's so much, and unfortunately, because there's bad advice, most investors or most, you know, business owners take 1 to 2.
Yeah.
They
Just
just
not
take just
aggressive,
basic.
right?
Yeah.
And I think they're scared, right? You don't want to get in trouble. You don't want to be, you know, having something done in a way where if I'm, heaven forbid, audited, that I feel like I haven't done something. But if those codes are there for a reason. And if you have someone professional who's helping you navigate through that, right? Which I'm a big believer, like, use a real estate professional, use a tax professional, use a financial professional. All of those people exist for a reason. So tap into your bank of knowledge, you know, and do that. So 1,400.
1,400. So I'll give you an example. So I think most people feel they don't take advantage of the code enough. They don't feel like they have enough deductions, and they are upset with their accountant generally. And I'm here to defend all the accountants out there. That it's actually not their fault, because you've actually, you know, you're in real estate, so you know the power team. So you're in the center of your team, and then you have these professionals around you, which you mentioned.
Yeah.
Real estate broker, you have your mortgage broker, you have all these power teams. That's how you cannot do it yourself.
No, yeah.
Right?
It takes a village. Yeah.
One of those power team members should be your tax filer. And that's what you've hired your accountant to do. The tax filer is the equivalent of you going in a grocery store, getting all your items, and then presenting them to a teller. The teller is the tax filer. You've already done all your shopping. All that's over. Game's over. They're just there to come in a compliant way, file your taxes.
Yeah. Okay.
And so what I'm suggesting is you open up a new position in your power team and you hire a tax planner. It's a totally different function.
Different person? Not
Different.
always.
It could be the same.
Okay.
But generally, the reason why people are upset, they're like, why doesn't my filer accountant
tell me all the
give me
ways
a bunch
that I
of
can
deductions?
save?
Well, it's because the game's over, and the way you look at taxes is through the front windshield, not the rear view mirror. right?
Yes.
So it's equivalent of hiring someone in that grocery store that's going to go around with you and personal shop
Yes.
and make sure you're doing the right things and you're picking the right items and then present it to the filer.
Well, and by the time it's presented to the filer, you're in the next tax year.
That's right.
So people are not even, I mean, if you have a W-2, it's not coming out to the end of January, right? You've done all your spending. You've done all of that for the previous year.
That's
and so
right.
now here it is. It's, February, March, April, and people are going in to file their taxes.
Right.
And the strategy has already either been done or not been done.
That's right.
Right.
100%. The game's over. So I'll give you a quick example. So I have this friend, his name is Scott. He's actually in real estate and he does construction. So much opportunity to take deductions in real estate. I mean, the big, beautiful bill, you have 100% depreciation in year one, which is being brought back with this big, beautiful bill.
Which is awesome.
It's beautiful. For long-term rentals, everyone should do a long-term rental, right? So my friend Scott, he comes to me 2 years ago and he looks like he's stressed out of his mind. He's like, I got to talk to you about tax. And I was like, yeah, come on in. So he comes in.
What month is this?
This was like October, before October. So he extended and had us. Now he got hit with a bill and he hadn't made money much in his business. So he didn't really kind of think about it. And then he kind of left himself exposed because he flipped some houses. He had incredible rental income and he'd done construction. A lot of construction, and he had just a bumper year. So he wasn't prepared in any way. And what happened is he told me his tax bill, which was October coming up, he had to pay $350,000
Oh my gosh.
that he wasn't expecting at all. Yeah, he was throwing up, right? And I was like, I just felt so bad. And I was like, well, tell me what deductions you've taken as a real estate investor. 2 or 3.
Oh my gosh.
Yeah. So he's devastated. He had to liquidate cars, pieces of property. He wasn't prepared for it. And it really set him back in business. This is not, there is another way. And just get some forward taxation, some planning, and then taxes won't be stressful. You'll actually look forward to tax time because you'll be like, I'm actually taking advantage of the code. And I've been able to offset all this income with a stack of deductions, right?
Yeah.
So he became a tax Hive client. This year, we're going to save him $250,000 to $300,000. It's pretty wild.
Yeah, that's incredible. So here it is, October. You've met with him. This is for the previous year that he owes.
Yep.
So you, in October, can actually start to strategize at that point and say, here's between October and December 31st what we can implement.
That's right.
In order to save you all of that money.
It's not too late for the next year.
Right.
Right.
So 1,400 possible deductions. And that's not just for real estate. That is like business owners in general,
That's
right? And I think it's important for people to know that are listening or watching this, that there's a reason why those tax advantages exist. And it's because the people that own a business are taking risk, right? They have employees, they're putting capital out, all of those things. And I do hear that a lot, like, hey, why do you have access to tax, deductions that I don't? Well, it's because I am putting a chunk of money out that you're not, right?
That's right.
So I'm glad that those strategies and advantages and codes exist. So what is it? Here we are.
Yes. Mid-year.
Mid-year, right?
Yep.
So plenty of time to implement some things.
Yeah.
Let's jump into it's August, and what can we implement? What would you suggest for a general business owner? And then we can do some specific to real estate.
Right. I love it.
Between now and December 31st.
Yeah. So I'll give you I'll give you 3 quick ones. So at one point in my life, I lived in Augusta, Georgia. At the time, I loved golf. So
good place to live if you love
Augusta
golf.
National is the big place, right? It's where the Masters is. And at one time at night, I snuck out on the course, which isn't recommended. I'm surprised I didn't get tased, right? So I snuck out there.
We'll cut this part out. We'll cut this out.
Yes. But so what happens is 250,000 people descend on Augusta, Georgia. It's a small town. 250,000 people come in for 2 weeks at a time during the Augusta National Tournament where the Masters is.
Take over the entire town.
The whole town.
Yeah.
There's no big high-rise hotels. So when I was out on that course, you look around, it's just neighborhoods as far as you can see. So if you live in Augusta, Georgia, you don't want to be there. You want to, that's vacation time.
Yeah.
Everything's a disaster.
And you Airbnb your house.
So it's even better than Airbnb. It's on the level. If you go to peerspace.com, you can see what the actual rental rate. Peerspace, P-E-E-R, space.com.
Okay.
You can see what the rental rate is. It's actually more on the level of a Marriott ballroom, is how much rates, because of the demand is so high. It's really high rent.
Wow.
So these people are, renting out their house. Let's say they're bringing in 30 grand. They're on the hook for 10 grand in tax. It's a lot of tax.
It's a lot.
So they get a lobbyist, go in front of Congress, say, hey, we want 2 weeks where we can rent our house out to our business and not pay any tax. And so that's Rule 230A.
To our business.
Yes.
Okay.
So what that meant is it became a code for all of us to take advantage of. So you as a business owner can rent out your house to your business for 14 days a year, tax-free. It's the happiest check you're ever going to cut, because you personally are going to be writing out that check to your business. And you can go to peerspace.com, check out how much your rates are. We recommend a monthly board meeting at your house. Make this a family business. And all of that money is the Augusta rule, right? That's Rule 288. You're not going to pay taxes on it. So we're saving clients. We saved one client $19,000 in tax from that one thing.
That's awesome.
So everyone watching this, that's accessible to everyone.
Yeah.
People will take the very minimum mileage, home office deduction, but some of these other ones, you can absolutely take advantage of the code right now.
Big chunks of money.
Right.
Big chunks. Yeah.
Yep.
Okay.
Then another one is most people have children, awesome children, and I love this legacy play. I think you should go on a hiring spree and hire your children. The big beautiful bill, it used to be 15 grand you could pay them a year. Now it's 19,000.
Okay.
You can pay each child.
I thought it was 12.5 actually. So
yeah,
I was
so
already
it's 19,000 now, which is wild.
Yeah.
Right? So
$19,000 per kid per
child
year.
Per year. Yep. So the way I recommend people, like, put a board up in your house and sit down with your children, make them part of your business, teach them business skills. They have to do things. They can't just do nothing. They have to do operational duties. And so I love the idea of just getting your kids in the room, say, hey, we're a real estate investing family. This is my business. This is my LLC, and this is what it is. Kids, let's make a list of things that you can do operationally. And they could do marketing. They can do janitorial.
Staging.
They can do staging. Yes, all this stuff in real estate.
Cleaning.
Yeah, cleaning.
Social media.
That's right.
Yeah, cool.
They're each going to have an account. You're going to cut them a check for $19,000
from the business
and not pay tax on that.
So let's back that up for a second though. Are they on payroll for the business, or are they a 1099?
They're on payroll for your business.
Okay.
Yep.
So if I have 4 kids, I have 4 employees on payroll.
That's right.
And do I have to pay them regularly every month, or it can be one fell swoop? Here's a $19,000 check.
Could be year end. You're paying them or whatever pay schedule you want.
Okay. So you could still take advantage of that for 2025 taxes.
That's right.
For every single one of your kids. How do they get them as an employee under their business?
Yeah. So
right now in August.
Again, you referred to this. One of my favorite books of all time, Dan Sullivan, he wrote the book, Who Not How.
Yes. Love it.
So a lot of times, as you've seen, especially in your profession, where someone just tries to do everything themselves, right? They try to be the mortgage broker themselves. They try to be the, they try to, and they try to take
hats.
Yes. And what happens is they become a bottleneck and they can't get anything done. We recommend you work with professionals to make sure it's done in a compliant way. Hive is a great option for you, where we have the systems and process to make sure there's good tracking, there's agendas, there's all these things that you need to track for your business. And that's what we do best.
Awesome.
Yeah.
So we call someone like you and get them enrolled as an employee.
That's right. Yes.
And then between now and December 31st, we write each kid a check for $19,000.
Love it.
Amazing.
Yes.
And now listen, if I say anything that is like, Teri, this is
You're
not
doing great so far.
This is not something.
Yeah.
But am I correct that is money that then goes to the child? Now, let's say the child is a minor.
Yeah.
You're then, as a parent, on that same checking account. That money then not only is a deduction for you, but you can use that money for that child's sports activities, for the whatever, right? So that money as long as it is in that child's account and is child expenses, can still be used by your family, but then your business is using that as a tax deduction.
Exactly right.
Okay.
Yep, you nailed it.
Okay.
Just the opposite of what you thought I might say. Teri, don't say that. No, it's the
No,
exact great question. And it's what people say, hey, what can I spend the money on? Most of what you're spending the money on now.
Yeah, because a lot of people hear that, and I thought that was the case because from how I understood that, a lot of people will say, I don't want to put $19,000 into a random account for my kid. Yeah. I'd rather use that money, right? If you have 10 kids, you don't. Hold on, listen. If you have 10 kids,
go make more babies. Yep.
Let's just say if you had 10 kids, the reason why I chose 10 is because it's easy math in my brain.
Yes,
okay?
right.
So $190,000 out of your spendable income, so that you have a tax write-off, right? That's a lot of money. But if you can still use that money, right, for your family to run and function, it makes it so that somebody isn't afraid to write that check, right? It's not just out of their.
A lot of questions. Yeah, the other question I get is like, what if I have a 5-year-old? So our CEO has, his wife has a dance studio, has a 5-year-old. The 5-year-old does marketing and is a model for their website.
Perfect.
I mean, it's way cool. So you can do it generally up until they're about 18, and that's when they go out and get their own job and they have their own income.
So if they're over 18, can you still do this? You're just no longer in charge of that fund, right? And they're now paying taxes on that income.
Yeah, generally they start having their own income and they have their own, but really you can go young all the way up.
Yeah, okay.
Yep.
Perfect. Okay, so that's
number 2. So number 3 is a lot of people have LLCs, which are awesome. And they, for liability, everything else. I mean, I'm amazed how many real estate investors I talk to that have everything in their own name. Please don't do that.
Yeah, they have their real estate in their own name.
Yeah, they have their own properties in they have properties that are rentals in their name.
Yeah, not the most protective.
Please don't do that. But a lot of people have an LLC. The LLC is incredible, but the problem is you actually pay self-employment tax. So that's 12.5%. On self-employment tax.
Yeah.
So it doesn't shield you from the self-employment tax. So you can keep your LLC, do an S Corp election within that LLC, put yourself on payroll,
right,
and save yourself the 12.5%.
Right.
I mean, if you look at someone who's making $100,000 a year, let's say as a mortgage broker, whatever it is, 1099, they're paying about $42,000 in tax. And most of them put 1 or 2 deductions together, so you take a few grand off of that, but they're paying a massive chunk of their money. How much better off would your business be if you could just keep that in your business and grow it?
Right.
Right?
Yeah.
Yeah.
So an LLC with an S Corp election.
Yes.
Because an S Corp, you automatically get not only the not self-employment tax, but is it an automatic 12.5? I'm off on my numbers.
Yeah.
It is
you get that right off the top. Yep.
For deductions.
Most people, and it's again a bad advice. They're like, oh, well, you're self-employed, so you have to pay self-employment tax. Well, you just take advantage of the code, right?
Yeah.
Yeah.
Perfect.
Yeah.
Okay. So Augusta rule and family employees.
Go on a hiring spree today. Yeah. Hire your children.
Okay. Yeah. And on that, I have one more question actually on that family employee situation. Yeah. Is there a minimum or a maximum amount of hours, or it's just, we can just say based on the hours that you did in 2025, your salary is $19,000.
Yeah. Yeah, and it's a lot of it's what you do. So they have to do which I think is so powerful as a legacy play.
Yeah.
You know, like a lot of times, like, oh, my mom, I want to see what she's doing in her business. Well, now you can include your children in that.
Right.
They could come to your office, they can work, and as they're working, they're picking up so much more than you ever even imagine.
Right.
Seeing you meeting and doing a podcast, seeing you meeting with these high-end, investors.
Yep.
I think that all that stuff is such a great way to pay it forward for your children.
I am shocked at the amount of kids that are growing up now or grew up and are now adults, and looking back, they had no clue what their parents did.
Yeah.
Their parents are working their guts out to put food on the table for this kid's entire upbringing, and they have no idea what they do for a job. They just know that they go to work and they come home and bills are paid.
Yeah.
And I do feel like that is such a disservice to kids.
Yes.
On a lot of levels, not just because they're unaware, but also they've missed the opportunity to teach them the work ethic, the effort, and the payout, and all of these things.
That's right. Yeah.
And I think we have so much more influence than we think as parents.
Amen to that.
Outside of the home and inside of the home.
Yeah. I love this play.
Yeah.
Yep.
Yeah.
Okay.
Okay, so those 3 things,
Yes.
and we can implement those.
Do that today.
Okay.
Yes.
Amazing. Do that today.
Yes.
Do that today.
You heard it.
Okay, so those 3 things are massive and can be implemented before the end of 2025. Now let's get real estate specific. Oh, actually.
Yes.
We're going to rewind for a second. When you talked about people holding real estate in their personal name
Right. Yeah.
versus in an LLC,
Yes.
it's so much more protective for so many reasons.
Yeah.
Not just because of the tax advantages
Yes.
of that, but because of the protection aspect of somebody breaching through piercing a corporate veil,
Yeah.
right? Versus going after an individual, right?
That's
Whether
right.
you've
Yeah.
been in a car accident, there's a trip and a fall at a rental, whatever it happens to be.
Yep.
We live in such a world of litigation now
Yeah.
that you almost have to live your life as if it's not if I go into that, it's when I go
That's
into
right.
that.
Yep.
So
Yeah.
I do think that is such a strong point to emphasize that you have to protect yourself as much as possible, and not just for taxes, but for protection.
Especially as a real estate investor. So I feel like in our nation's history, at one point when people sued someone, it was actually probably for a legitimate reason, but a lot's changed in the last 50 years, right?
Now
Because we've
it's
added
for
so many
whatever
more.
reason.
We have more attorneys per 1,000 people than probably any country.
Yeah.
And so, especially as a real estate investor, where you hold an asset, people look at that asset as like, how do I leverage this? And there is professional people that's all they do is they do lawsuits. So
Look at how many people that professionally scam. They
That's
call
right.
just to see if you'll give them a check.
Right.
They mail something to your house
Right.
that is fraudulent just to see if you'll mail a check, because a lot of people will.
That's right.
Because they are so trusting.
Yeah.
So it is very sad, but that is the case.
Yeah, so here you have this, you're a real estate investor, you have this beautiful property, and someone's like, wow, how do I take advantage? And if you're protected, you could sleep at night knowing, hey, my assets are protected. I don't have to lose sleep wondering if someone's going to trip and fall on my property and try to sue me for a bunch of money. Because if there's enough headaches around your structure and someone sees your structure, they go get a lawyer, the lawyer looks at your structure like, this is not worth the headache. Let's
Right.
move on to the next person. That's how you want to position yourself.
Right. Make it so complicated
Yes.
for the person to cause a problem.
Yeah. And you don't own anything. Your trust owns it. Your LLC owns it.
Right.
I mean, look at we're each an entity. Well, look at how structure is also an entity. It's a different, separate being
Right.
to us, right? So that's where you want to hold yours away from yourself.
Right.
Right.
Yeah. Love it. Okay. So specific to real estate.
Yeah.
Let's talk about tax strategy. There's a lot of people who see the wealth building opportunity that real estate creates.
Yep.
There's a big risk, big reward, right?
Yes.
In real estate. You win some, you lose some.
Right.
And I think if you were to talk to real estate investors 2020, 2021, 2022 up until June, and then
Yeah, sure.
everyone's like, oh, I'm getting a new
Yeah.
career.
Right.
Versus they're still in it,
Yes.
but they've had to pivot quite a bit.
Sure. Yeah.
But still being successful. So let's talk about tax strategy that sets them up for success if they want to own a short-term rental versus a long-term rental versus a flipper.
Yeah.
Those types of things.
Yeah.
So there's
Yes.
my general
Love it.
my general question.
Yeah.
You deduce that however you want, Shawn. And
So
then
let's
us
talk
some
about the
magic.
first one, which would be the long term. So the best way I can describe depreciation is that the IRS puts a life on everything. So they look at every little asset or every piece of equipment, there's an actual life. And at the end of that life, that's dead.
Okay.
So the way that they look at, so let's just say you're a baker, for example.
Okay.
And you need to go bake some incredible donuts. You're going to buy this oven, and this oven is $5,000. The IRS looks at that oven and says, okay, that other oven is going to be worth less in the future. And we're going to give that oven a 5-year life. So it means you as a baker, 1 year from now, that oven's not worth $5,000. It's now worth $4,000.
Right.
That's a straight line depreciation. So you can take that 1,000 and you can depreciate that 1,000. So you get your tax bracket, whatever that is, in a credit towards your taxes.
The second year.
Yeah. Right. And so the way it works in real estate is the IRS looks at your rental property as 27 and a half years. Is the
What a
life.
random number.
Right? I know some
27
number
and a half
cruncher
years.
came up with 27 and a half years. So the advantage that, as an investor, when you buy a long-term rental, every year it's, 27 years, you get to keep taking that depreciation off until the value is zero on that property. It's pretty remarkable.
And do most people do that?
You would hope that most would, but what we find is some people they don't know how to do it, and they try to do everything themselves, and understanding how to document that
Right.
reduction in value in a property is difficult, and so they end up not taking the deduction the way you should.
Yeah. And also, might I just say, not that I'm anti people using specific software, TurboTax, whatever
Yeah.
the other softwares are, to do it themselves, but they do it themselves to save money.
Right.
And then what ends up happening is they actually
You end up paying more.
they're not
Right.
saving money,
Yes,
right? Think
right.
about the tens of thousands, or in your other example, your client Scott, hundreds of thousands of dollars that he's saving by paying you and your team a small chunk of money, right?
Yeah.
No different than in my world
Yes.
of I'd rather sell my house for sale by owner than have to pay a commission
right.
to a real estate professional. I'm like, it makes zero sense,
Right.
because you think you're saving money by not
Yeah.
paying a commission when really you don't know how to negotiate.
Yeah.
You don't know how to do contracts. You don't know how to protect yourself. And you're going to make more by hiring me than you are
100%.
saving doing it on your own. And I think that's the same in your industry. And so it's
I
baffling.
have this agent that I've worked with for years. She is remarkable. And the advantage with working with her is she has a whole list of clients versus me trying to for sell by. And I've
Yeah.
paid her a lot of money over the years.
Right.
And it's the best check I've ever cut.
Right.
Because she is a great negotiator.
Yeah.
And she'll come to us and like, hey, this is what I think we can get. That would have been more than I would have done on my own.
Right.
Because she is so good at that.
And
I'm
details
loyal.
matter. Yeah.
Yes.
And kudos to her for providing such a value to you and being confident in the value that she provides,
Oh, yeah.
right? And same thing for you to your clients.
That's right.
I mean, who's going to come to you and say, Shawn, you're really not worth the
Right.
amount of money that you're
Yes.
charging, when you're like, by the way, I've
Yeah.
saved you $250,000 on your tax liability.
Right. Yeah.
Get
We
real.
even do Tax Hive does a guarantee where they guarantee they'll save you 3 times the amount, or you get your tax planning for free,
That's amazing.
and you get to keep the plan.
yeah. That's
But
amazing.
here's another thing on the long term. So if you've ever heard the term cost segregation,
Yes.
it's a study that they can do. Let's say you have a rental property, and that's 27 and a half years. Cost segregation, an advanced strategy. But let's say that you're making a lot of money and you have a lot of tax liability you have coming up. Even though the IRS puts a 27 and a half year life on that property, the cost segregation team could come in there, and there's a lot of items within that house that have a shorter lifespan. So you might have like different things in your kitchen, all sorts of furniture and your
TVs,
cabinets,
yes.
and other things. There's a different life in each one of those things throughout the whole house.
Okay.
So what they'll do is they'll come in and say, hey, we're going to depreciate the cabinets at this. We're going to depreciate the dishwasher at this. And you end up getting a bigger chunk of your depreciation up front.
Up front.
Yeah. So that's
Love
what,
that.
if you ever heard of cost segregation, that's the most simple way to do it. It's actual professionals that know each one of these compliantly within the law to make sure that you can accelerate your depreciation in a property.
And you can only do that on a long-term rental
Yeah.
versus a short-term rental that you are Airbnb-ing.
Well, Short term, like, is still you're still long term.
Okay, I just wanted to clarify, like, that is because I think a lot of people listening think long-term rental, meaning they've got a tenant that's in there 6, 9, 12 months at a time on a lease versus owning a quote unquote STR, short-term rental. But they're still owning it over the long term.
You as an investor still holding that property for a long period of time.
Okay, just clarifying that they can take advantage of that also. Okay, perfect.
So on the other side, if you're doing a flip and you create a bunch of cash, which is the American dream. Love it. You get a great deal, and you can do a 1031 exchange, right?
Love those.
Your clients have done, right? So you can take that money. Let's say you make $300,000. You can roll it. You can do a 1031 exchange. You can roll it into another investment, and there's a certain parameter and time that you can do that.
Right.
You can protect that having to pay that tax up front on the flip.
1031, for those who aren't understanding, you cannot touch that money at all when the house sells, right? It goes into a special account that somebody else manages. Then there's rules, obviously, on what you can put that money into to defer those taxes and not have to pay.
So incredible opportunities. I mean, a lot of times, you're buying a work truck if you're a flipper or you're a long-term renter. That's a Section 179, so you get to actually depreciate that truck that you have, a utility truck. Is the way the IRS looks at it. There's a life on that truck that you can depreciate that as well. So really look at all your products, your equipment, your home office deduction as an investor. There's all sorts of things that you just need to make sure you're proactively doing tax forward planning.
Right. And meeting with you at Tax Hive, ideally they would come in sooner than later in the beginning of the year, right? And kind of make a plan. But let's say somebody decides, okay, it's August, I want to come in, and they're going to say, okay, Shawn, I'm going to bring in $500,000 profit over the course of all of my investments, my job, my LLC, whatever it happens to be, just total. That's what I am looking at having to pay taxes on. I've done zero tax strategy. And then you can sit down and say, what's your cash flow and being able to pay some things out, right?
Sure.
I think you should buy a utility truck or plus the family, employees, all those things, right? And get those things done so that you can say, if you do X, Y, and Z, we can get your tax liability down to whatever.
Yeah, so we're saving the very small business owner. We're talking small. $10,000. The bigger business owners, $250,000 plus. And
That's
it's
incredible.
exactly what you said. So if someone comes in and says, hey, I know I haven't taken the deductions I should. So we sit down with our team, our tax professionals, dig into their business, their investments over the last year's taxes. We look at what they didn't take, what they took, and then we start, we build a plan. It takes about 2 to 3 weeks. And we build a plan for them of all the things that they can take advantage of this year. And then our team goes to work on implementing that plan. So when it comes to tax time, you're like, wow, I went from 2 deductions I was taking to 10 deductions. I'm just feeling so great about taxes now.
Yeah.
It's not like this dreaded thing that's coming.
Little do they know there were 1,390 more.
Yeah, they could take advantage of. So we love helping business owners, the aha moments where they're like, wow, we didn't know we could take this kind of thing, and it really changes the trajectory of your business.
Well, and also not only is it saving them money on their tax liability that they're having to pay, it's money that they're taking, and instead of paying it in taxes, they're able to pour it back into their business.
That's right.
So they're benefiting from, it's not dead money, right? So that's the benefit of it. If you said to somebody, hey, if I gave your business an extra $100,000, what would you do with it? Oh, I'd buy a truck. That's right. Or I would use it as a down payment on a commercial building. I'd hire blah, blah, blah. This, how many more employees? And so you say, well, why don't you do that if you have the cash to do it between now and December? Because you're going to pay that $100,000 in taxes.
Couldn't have said it better.
So
keep that money. It's really your business taxes, income taxes are the two that you have control over. You're
Right.
not going to go like get a Snickers bar and say, hey, can I negotiate the 6% sales tax, right?
Right.
You have gas tax. We end up paying over 50% in all in taxes.
Yeah.
So you are obligated as a business owner to make sure you're maximizing, you're optimizing your tax
Yeah.
plan for the year,
Right.
right? And you explained it perfectly.
And as a business owner, shouldn't we, I say we because we're
Yes.
business owners,
Yes.
shouldn't we be buying absolutely everything out of our business instead of personally? Would you recommend that? Like there are people financial people who will say, anytime you go out to eat, anytime you go on vacation, anytime you fill up your car with gas, whatever, the business should be paying for all of those things rather than the individual. Would you say that is
so
smart?
the number one rule, it has to be a business purpose. So if you're a mortgage broker or you're a real estate broker and you're meeting with a potential client, you're taking them to lunch, 100% that should be paid out of your business.
Right.
Right. Any of the business purposes. And what happens is a lot of business owners or investors, they're like, I know that's important. I'll just keep this receipt. Things disappear.
Yeah.
If it just makes it part of your discipline, hey, if I'm spending anything that's a business purpose, I'm buying this cell phone for my business, you need to make sure that's all tracked.
Right.
Right. So
Yeah.
100% so important. Just have, and it's not that hard. Little disciplines. There's systems and software. You can take pictures.
Yeah.
You can keep them
iPhones
in.
make it super easy
Yes.
now, right?
Yeah. Keep it simple. It's not that difficult.
Yeah.
A lot of times people hear tax and they run for the hills. They're like, oh, the last thing I want to do is worry about this stuff.
Right.
If you just spend a little bit of time, it'll save you so much.
An hour every Sunday tracking the expenses
Yeah.
you paid over the past week.
Yes.
Right. Or even once a month, spend a couple of hours just kind of tracking that. How many people, percentage wise, this is like, in Family Feud, when you're like on a scale of 1 to 10, you have to try to get the magic number. It doesn't
raised
have to
with
be
that
exact.
show.
Yeah.
Yep.
I love that show.
Yeah.
I still watch that show.
Yeah.
So out of all of the clients that you see, what percentage do you think are not tracking their expenses to the point where you're like,
Yeah. Right.
you're like, listen, if I could give you one piece of advice,
Right,
it would
yeah.
be to do your bookkeeping.
Yes.
But that's a legit question. How many people do you think are not tracking their expenses? Because I think if they're not tracking and they can't measure it,
Yeah.
they're not taking advantage of
Yeah.
it. Right.
I would say the vast majority aren't. And I'll give you a quick example on a bookkeeping. So we had this client. He's like, oh, I have my tax liability is like $160,000. As we took over his books for bookkeeping, we found out that he was double counting all of his revenue. And in his mind, he had to pay, according to his revenue, he had to pay $160,000 in tax. And he was soon going to write out a check for his taxes.
And it should have been half that.
Half.
Oh my God.
So by us taking over his books, and he'd been doing it himself for so long, we were able to fix that where he was double entering in all of his revenue. And he took him down to $80,000 in like a day, right?
Oh my God.
But it's like, to your point, is most people like are good at creating a product. They're good at buying houses. They're good at this. They're good at all that stuff. That's your unique ability.
Yeah.
Just keep doing that. Let some professionals do the other stuff.
Right.
Right.
Stay in your lane of what
right.
you know. We all have strengths and
Yeah.
weaknesses, right? I for sure know my strengths. I also know my weaknesses.
Sure. As we all do.
Obviously, I told you I was on a scale of 1 to 100. I'm a 3 on tax strategy.
Right.
So I need to implement all of these things. But
Yes.
yeah. Okay.
Love it.
So give me 2 more just blanket
Yeah.
pieces of like nuggets of
Yeah.
advice that you feel like I feel like there's been so much. I hope that people listen to this multiple times with a notebook.
I hope that people, if they see tax, they still watch it.
Yeah.
Right? Yeah. It's
Yeah.
like, tax. Oh,
Yeah. We'll just name it Save Money. And then
Yeah.
we'll throw tax in a very small font.
I'll throw 2 quick ones out there.
Yeah,
Because there's
2.
the big, beautiful bill. Everyone's talking about that.
Yes, I know.
It's big.
We could do a whole nother podcast
We
on
could.
that, right?
I'll just give you
Come back and do
two. There's a couple of interesting ones that have never been done that are showing up in the big, beautiful bill. Number one is they have a MAGA account that each child can qualify for $1,000 that the government is going to put into an account that they can grow tax-free.
Okay.
And what happens is that child gets $1,000, but parents can put up to $5,000 in that MAGA account every year, and it's completely tax deferred. And then they don't have to wait till they're 65 in this
The
case.
growth is tax deferred.
The growth, everything is tax deferred. Yeah. When they hit 18 years old, they can start drawing from that fund. They can do it in a couple of ways. They can take it out for medical expenses, buying a house, starting a business, or education.
Okay.
And so as an 18-year-old, you imagine if you put in $5,000 a year for your child.
Yeah.
And that keeps growing, and it's in the market. So it's actually placed in the market with a custodian. So at the end of 18 years, that child now has a massive leg up.
Yeah.
Call it 100, 150,000. I mean, imagine when we're 18, we didn't have nearly that advantage.
No.
So that's number one. So that's new in the bill. Never been done before on our nation's history. The MAGA account.
So that's
crazy.
That's going to happen. $1,000 per kid.
Yep.
That is under the age of 18.
That's right.
Okay.
Yeah, and they can grow it. Okay, so that's one. Number two is if you buy a car made in the USA and you make payments on that car, for the first time ever, you can write off your payments on that car.
Wow.
All the interest on the payments on the car.
Wow.
So if you want to buy a Tesla, you can buy a Tesla, and all those payments that you make are actually write-offable, just like it is with a mortgage. So it's the first time we've ever done that, and it's got to be made in the USA.
Wow.
Yeah.
The interest is, I love that word, write-offable. That's
Yes,
such a great word.
write-offable. Yes, I need to have a T-shirt, write-offable.
That's good.
Right?
That's good. Yeah.
So there's some really interesting nuggets in there that, like, you as a business owner, take advantage of. Even you go to YouTube University, look up some of the latest stuff. Hey, what's the latest on Big Beautiful Bill, and see how you can take advantage of it.
And that it starts 2025.
Yeah.
So those things can be taken advantage of
Yes.
today.
Yeah. That's right.
Amazing.
Yeah. So there's a
Amazing.
couple more. We can keep going, but I think we've thrown a bunch out
Yeah.
for you to consider.
So good. So good. I feel like you need to come back and we need to do
Let's do that.
a whole nother one.
I love it.
So yes. Okay.
I get excited about this stuff. I know some people are like, but I nerd out on it.
I love it.
And that's why I think people fear the IRS. They fear the code. And anytime it's like, what are you afraid of? Just generally.
Me?
Snakes, anything, spiders?
Sharks. Terrified.
Sharks, okay.
Yeah.
So
terrified of
sharks, do you want to keep that close in your mind, or do you want to put it as far away as you possibly can? You don't even think about it. Right?
Yeah. Oh no, I don't swim in the ocean.
Yes.
I'm a lake girl.
That's
through
right.
and through.
There's no sharks on that
The
lake.
beach, I will lay on the
Yes.
beach
Yes.
every
Right.
day.
But not touching your foot in that.
Not,
Yeah,
I'm
I'm with
not
you.
swimming in that.
So it's the same with everything. So people fear the IRS. They fear taxes. So what happens is they don't want it forefront in their mind. They don't even want to think about it. And so they put it as far out as you possibly can.
Yeah, if you don't think
and
about
I don't
it,
even
it
want to
doesn't
touch it
exist,
until
right?
tax time, and then I have to deal with that nightmare, right? Because, so I want you to all reframe it and just say, hey, how do I take advantage and do what the wealthy are doing? The wealthy do this stuff every day.
Right.
They lean into it. They have that tax in the forefront of their mind on a daily basis. They are just doing this tax stuff. They have teams looking at opportunities for them to save in tax.
Right.
So the wealthy, they leave a trail, and we can always follow that trail on what they're doing.
Love
so
that.
take advantage. Lean into the code. Take advantage of it. Start stacking them up.
And I love that you use the word opportunity, right? They look for opportunities to
right.
save, because I do think that is it. Like, go in eyes wide open and see that there are so many opportunities that you can take advantage of, rather than feeling like you're just, going to get blindsided and
Yes.
sucker punched, right?
Yes. There's a better way.
Yeah.
For sure.
Yeah. Always a better way.
Yeah.
Amazing. Well,
Yeah.
thank you so much. I am
Thank you, Teri.
just so thrilled with all of this information. I feel like I have a lot of work to do now, and I'll be calling you.
Great. I love it. We love those calls.
Yeah. So reach out to us. Thanks for listening. I'll put Shawn's contact information in the description so you can reach out to him, reach out to me. And let's save you some money for sure, right? Whether it's just, you're just a business owner in general, you want to become a business owner, you're a real estate investor. Gosh, let's start saving some money.
Let's do it.
Yeah.
Yeah,
Okay.
appreciate it.
Amazing. Okay.
Thank you for the invite.
Of course. Thank you so much for being here. We hope you enjoyed listening to this episode of the X Factor Real Estate Podcast. Thanks so much for being here and listening. It's been a pleasure making this podcast for you. And as always, if you have any questions, don't hesitate to reach out to us. Drop something in the chat. Let us know what you're interested in hearing about in the real estate world. I'm Teri Hudson, and I hope you join us for our next episode.